Hey students, here we are with your homework, and I want to give you a little bit of a summary of the homework and a little bit of maybe a few tips on how to get started. But I don't want to give you the answers to this one. I want you to work your way through it. So here's your homework. Now really this is the same homework we've been working on. This is our cash flow budget. We are looking at selling volumes of beef after we buy them and then feed them up to a certain weight to then resell at a later level. We've worked with these values and changed them up a little bit. We've got how much beginning cash we need to make it cash flow. But now the question is, how profitable is this? So this is what you've got here to look at. I added something else to this sheet, is depreciation. We haven't really dealt with depreciation, but I went ahead and plugged that into here now. And so what is depreciation? Well, it is basically just the assets that we have to run this business. Trailers, trucks, maybe there's a barn. We've probably got leased pastures at this case. We've probably got maybe a tractor we keep out there to try to operate. And so that's $325,000. That $325,000 has got a useful life of 10 years, and I estimated it will be worth $85,000 at the end. So the formula just takes the cost minus the salvage value, divides it by the useful life, and that comes up with $24,000 a year straight line depreciation. Oops, that is what's new with this resource page. Our info page. Revenue and expense is the same. I've already got it worked out for you. Cash flow is already worked out for you as well, and it shows that we end up with these amounts of cash here at the end. Now what you have to do in this homework is do the income statement, which I've got it framed out for you, the items that need to be there. You also have to do a balance sheet. And so in the video of this week, I show you how these things connect. But let me show you how to get it done right here just a little bit. So for example, on our profit and loss, sales is an amount you need. So you just press equals, and your cash flow has most all of these already totaled up for you. So the sales right there totals to be $419,000. Hit enter. Next thing is cost of goods sold. Well, that is the amount of beef we purchased. So once again, equals, jump back over to your cash flow, which has pretty much everything you need. And we have purchase of beef totaled right there for that $524,900. Now, gross margin is just simply equals, take the income minus our purchase of the beef, which is cost of goods sold, the only one we've got, and that is a negative $105,000. Now, that's a problem right there for us. Because if you sell more, you probably have to buy more, and we're already losing money. So really, this business is now starting to not look good at all. But that is how you do the complete profit and loss. And at the very end, you'll get net income, and then you'll get the bottom line. These are other expenses. There's depreciation right there. You would just simply go press equals. And now that's not part of your cash flow. Depreciation's non-cash. So we've got to jump back to the info, and that number is right there, annual depreciation. That's how you'd bring that over. You're going to bring all of those over, and you're going to get the net income. Next is going to be the balance sheet. When you get done with net income, you've got all you need to do the balance sheet. The thing you're going to do is go grab things like cash on hand, like equals, go back to the cash flow, and we end the year with $15,000. So that is how much should be there. We've got our assets that we have, equals. Those assets are really spelled out on the info page pretty cleanly. Total assets right there. Of course, depreciation. Every year, depreciation is calculated, and on your balance sheet, it's something called a contra asset. So that's what that is. Accumulated depreciation is a contra asset. And that is going to be that it's an asset value, but accumulated depreciation is always negative. So I'm going to press equals, put a negative in front of it, and then go over to the revenue and expense sheet or the info and grab depreciation, and that's how much it is. So actually, assets, we started out with $325, but after you operate a year, you only have $301. So that's kind of that side of the balance sheet. But you've got to actually do this side of the balance sheet using the same kind of concepts that I have done to get that all finished right there for you. And so that's what your assets are actually not worth. That's what the non-current assets are worth. It actually is that stuff accumulated plus cash on hand as well. So there we go. That's what our asset values are. You'll need to do this side, and of course this and this need to balance. If they don't, here's a formula for you. Just do equals subtract these two, and however much you're off is what you are looking for. And you might go find that as part of the income statement or part of the cash flow or part of the resource page to kind of locate what your problems are here. Now, a couple things, just I'll let you work these out, but retained earnings, that is the net income that you get here in this bottom line. So that's where that comes from. Investor capital is the money that it's taken to get this going. Let's go back to the resource page or the info page a little bit. And you can see here that we've got beginning cash of 180 and investor cash of 191. So really our investor money are both of these things added together. But when you plug this into the balance sheet, hopefully your balance sheet will balance, and that lets us know that our cash flow values, our profit estimates, and our balance sheet is balanced. That lets us know all of those things must be accurate depictions of these financial projections. All right, so that's kind of a summary of your homework. Get to work on your homework, get that completed. Have any questions, make sure to let me know, and I'll try to help. This week, Monday and Tuesday, I have some open office hours online, so that's a great time to get some help. All right, thanks.